What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Tencent, ticker symbol TCEHY, trading for $66 a share as of August 11th, 2020, equating to a market cap or capitalization of over $630 billion and a PE of nearly 50. So, what's the move? Is Tencent still a 10 out of 10? Or are we gonna hit it with the ban hammer? This is your quick stock analysis. Before we get into the effect a potential ban on WeChat in the US could have on Tencent investors, I think it's important to note just how massive the company actually is. After all, the company is the world's largest video game company, owning all of Riot Games, known primarily for being the creator of League of Legends. They also own a 40% stake in Epic Games, the creator of Fortnite, 11.5% of Ubisoft, 5% of Activision Blizzard, which of course includes Overwatch, World of Warcraft, Call of Duty, Candy Crush, 80% of Grinding Gear Games, 15% of Glue Mobile, 5% of Paradox Interactive, 20% of Funcom, as well as King of the Hill, FIFA Online, Rainbow Six, Path of Exile, along with thousands more. Tencent is also the third largest social media player, only behind Facebook and Google, with its WeChat app, QQ, Qzone, and even a 12% stake in our boy Snapchat, which we will talk about more later. They are also one of the largest music companies in the world, with Tencent Music Entertainment, which controls roughly 60 to 70% of the local music market in China, along with shares in many highly profitable global music ventures, including a 10% stake in Universal Music and Spotify. How about e-commerce with a 20% share of JD.com, which is one of China's largest online retailers? They are also a massive online payment processor in China, with its massive WeChat Pay and Tenpay apps. Or electric vehicles with a 5% stake in Tesla and a 15% stake in NIO. We're almost done, I promise, but the company also has market share in television, cinema, cloud, search engines, video streaming, international real estate, insurance, ride sharing, VR, AI, cloud. Yeah, I think you get the point. They are a significant player in almost all of the major markets an investor would want to invest in. If political games settle, Tencent has the potential to be one of, if not the best performing large cap tech companies in the world for years to come. So now that we understand how massive Tencent really is, we have to ask ourselves, has the news of the looming WeChat ban made investors too pessimistic, or is it just the early warning signs of America's severance with the Chinese market? It's a lot to unpack, but let's start with how a ban on WeChat could affect the company. Remember, the largest portion of Tencent's revenue came from its gaming segment, which overall wouldn't be too affected by the WeChat ban. And while WeChat has had on average 19 million daily active users in the United States, this is merely a drop in the bucket compared to the over 1 billion monthly active users outside of the US. In the grand scheme of things, this ban wouldn't be that detrimental to a company of Tencent's size. Investors should also keep in mind that WeChat, along with a long list of other apps, were also banned in India, which, considering India's massive market, could also be cause for alarm. However, WeChat was already showing signs of weakness as Facebook's WhatsApp gained traction in the country. So yes, these bans are certainly not ideal, as it limits the company's overall addressable market. But realistically, with a hefty majority of the company's social media presence being based in China, combined with their many other lucrative businesses, we can pump the brakes. It's okay. But only if this is the means to an end. Remember that 12% stake in Snapchat we mentioned earlier? Could Tencent potentially be forced to liquidate their Snapchat shares? And could this be the first domino in a chain reaction of them being forced to relinquish their shares in other American companies, like those mentioned before? If the US government is concerned with Tencent collecting data on US citizens and intellectual property theft, who's to say they would stop with WeChat? After all, Tencent is closely tied to the CCP, or Chinese Communist Party, and by law, any information the company has, they are required to relinquish to the government if requested. Many articles are starting to speculate that Trump's intent is to completely remove Tencent's mobile games from the App Store, which would certainly be cause for concern. Does this mean even companies Tencent has a stake in would be at risk? Are they going to take away our Candy Crush? Remember, gaming is Tencent's largest segment, and more than 60% of this segment is made up from mobile games. And let's be real, it's hard to say how much access Tencent is given with its partnership with these US companies. Would this mean that all of the US equities we covered earlier will be judged on a case-by-case basis? And we should note, in the worst-case scenario, if the US continues to exchange political blows with China, it's certainly possible Chinese companies could be delisted from the US market entirely. This would be a huge escalation, but it would certainly reshape the market as we know it. After all, remember the impact the trade war had on the market when it was first reported? Now imagine if a total delisting were to take place. Trillions of dollars would be taken off the table. It's hard to say what intelligence the United States has received, as here at Quick Stocks we haven't had our weekly phone call with Trump and Xi Jinping yet. But considering the escalating tensions, an investor has to at least consider the risk these tensions pose for the market, and honestly our everyday way of life. Considering how intertwined a company such as Tencent is with US business, it would take decades of paperwork to completely remove Tencent from the United States, if it were even possible. And quickly, before we get into what's our move, we should note that if Trump does ban WeChat, it'll most likely be by forcing Apple and Google to remove the app from its App and Play Store. Depending on how it plays out, Apple could be forced to remove WeChat from its global app store, causing a potential drop in iPhone shipments of up to 30% in its Chinese market. This would be a devastating blow to both Tencent and Apple, along with the thousands of companies reliant on them. It's hard to imagine the United States wanting to cripple its own prize company. Ultimately, we won't know what's going to happen until the Secretary of Commerce lay out the guidelines. However, the Chinese Foreign Affairs say US must not open Pandora's box or they will suffer the consequences. Take it for what it is. So with all of this in mind, what's our move? Remember, here at Quick Stocks we made a video just last month where we sold out of $10,000 worth of our shares in Chinese companies, leaving us with only 20 shares of Tencent valued at around $1,300. The reason we took our gains is due to the growing tensions we just talked about. With all of the great companies an investor could own, it just wasn't worth the risk of having a sizable investment in Tencent at the time. Which is a bummer because, like we talked about, with the company's equities up to this point, they really did play their cards right, and have large exposure into some of the fastest growing markets, and this company should easily be a trillion-dollar company. However, remember, here at Quick Stocks, we are certainly not a financial advisor. This information is for entertainment use only. Really, it comes down to your beliefs. If WeChat gets banned in the United States, is it going to stop there, or is it just the beginning? How the cards play out could play out to have the largest impact on the global economy of our lifetime, be it good or bad. Final notes, the ban of WeChat is a mere jab that, in the long run, will have little impact on the company like Tencent. However, this could certainly be a signpost of future turmoil coming. One could certainly argue that if Biden were to take office, which the polls are hinting towards, he wouldn't take such drastic actions towards companies like Tencent. Realistically, in our long-term quick stock portfolio, I plan on keeping our small position in Tencent for the foreseeable future. However, I don't feel comfortable increasing our exposure at this time. Anyways, guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 1,200 subscribers and plan an early retirement. I will catch you guys in the next one.